What's up, everybody? It's another week of What the F Happened. And you know what? It's like every week it's Groundhog Day because it's the same crap over and over and over again. And you know what that crap is called? Manipulation, fraud, Ponzi's. They're left, right, and center. I don't care if it's FTX. I don't care if it's the Fed. I don't care if it's voting. It's all smoke and mirrors. And folks, too many of you are following the leaders off the cliff. You're following the herds. You're conforming. You're thinking you got hope. I get it. Everybody wants some hope. But right now is not the time for hope. Right now is the time for logical thinking. Take FOMO and throw it in the garbage can. Take temptation, throw it in the garbage can. There's no more money to be made right now. Now is the time to preserve and protect. We're going to cover all of this and a lot more in today's What the F. We'll be right back. What's up, Chris? All right, folks, we're back and in charge here. It's What the F Happened. We're got a lot of stuff to talk about. So it's Snaggy and myself on the show here today. TikTok, you're only seeing me. I'm in this studio because you know what? My whole tech stack over there just exploded. So, hey, we're playing this card. But glad you guys are all joining us this morning because there's a lot of crap going on. I mean, you've been watching the markets. One day it's up, the next day it's down, the next day it's up, the next day it's down. It's ping-ponging sideways, and it's giving people false hope. Stephen, what do you think about what's happening in the markets right now?
Yeah, it's pretty wild. I mean, a lot of emphasis on what the Fed is going to do, and they're coming out with their minutes, direction. Their next meeting is not till December, but they're starting to release kind of some clues, so to say, on what they plan on doing. And the markets are looking. Is it going to be another 75 basis point increase? Are they going to ease things? Do they expect inflation is starting to finally pull back a little bit where they can start to ease? But at the end of the day, it's really just a Fed-induced coma that we're in right now, and roller coaster, from where they've just reduced rates to zero and pumped more money than the world has ever seen into the economy over the last few years. To now just tightening things quicker than we've ever seen before, and starting to pull back on some of the quantitative tightening that they're doing. And, that's affecting everything. And so it's just, at the end of the day, it creates this roller coaster. And then when you mix in just complete fraud, like what's happened with FTX and Sam Bankman-Fried, and just watching the coverage on that, how they are treating him almost like, it wasn't his fault. When you read the real story, and one of the probably the biggest Ponzi scheme in American history, this is at the end of the day is going to be. And it's just kind of interesting to see the different articles coming out and different angles being taken by different news sources. And it makes you really realize, like, who can I listen to? Who can I trust? And you can't just read the lines. You really need to look between the lines. What is really happening? And that's what we're going to do today, is to dissect what is really happening today. What can you actually expect coming up to close out 2022 and leading into 2023?
Yeah, and it's awesome. On TikTok, we got the real Chris Kirkpatrick joining us. So it'll be interesting to kind of get him in on some of this and have some fun with this. But let's just talk a little bit about FTX, and this Sam thing. And it is interesting. At first, when this whole thing broke, I really didn't pay a whole lot of attention to it. I'm like, oh, here we go. This is going to be interesting. And, it's like I didn't even know this Sam guy with the crazy hair was even like a major player. I thought he was like trying to buy it or all this other stuff, because it almost seems like he's being insulated from a lot of the crap going on. It seems like he's sort of being held out here, but that makes sense if you look like Stanford and everything else going on and all this, that, money that stands to be lost. But you know what? I kind of think I've got this figured out. And Chris, I'd love your take on this, and same with you, Stephen. But Stephen, can you cue up the video? How many of you have ever seen the movie Dumb and Dumber? Right? Dumb and Dumber. Don't play the video yet, but I just want to talk about that one scene, and we're going to play it in a second. But FTX, what they basically did is they created a coin, right? FTT. They created a coin, and that coin is worthless. It's just worth whatever the market tells you it's worth, whatever investor sentiment says it's worth. But they create this coin, and they they start making this coin, which is basically just a bunch of IOUs, of false promises. And they build this ginormous company, this FTX brokerage and FTT coin. And here's kind of how I look at it. Stephen, play that video of the Dumb and Dumber scene where, you know, the guy's holding a gun to him saying, "Where's the money? Where's the money?" That's everybody right now with him. So we're going to play this and just listen up.
Listen, Mr. Samsonite, about the briefcase. My friend Harry and I have every intention of fully reimbursing you.
Sam.
Open it up. Open it up! Go ahead. Open it up. Do what he says. Hurry.
FTT coins.
What is this? Where's all the money? That's as good as money, sir. Those are IOUs. Go ahead and add it up. Every cent's accounted for.
Every cent's accounted for.
See this? That's a car. 275,000. Might want to hang on to that one.
I mean, literally, like, I don't think there's a better representation than what's going on with FTX and FTT. The coin are the IOUs. The character is Sam saying, "Don't worry, it's all accounted for." So, Chris, what do you got? What is your take on this whole thing?
Oh man, so I think it's the classic. I mean, we preach this all the time, right? It's like never put your money into anything you don't understand. So I interviewed a guy actually when this first happened. His name is Dominic Harabi, and so he's really deep in the crypto space, like way deeper than I'll ever be. And so I think what it all comes down to is don't put your money into anything you don't understand. And these exchanges like this they go completely against what the spirit of crypto is. But the problem is there's so much hype around crypto. There's so much hype around Bitcoin and all the technology and all the like hedging as an asset that people kind of get into it and they get this FOMO. And then they get into it without really knowing what they're getting involved with, right? And if you don't understand it fully, the challenge is now you have exposure in ways that you didn't even realize you had. And so this is, like, it's funny because I've talked to several, like we'll call them Bitcoin millionaires, right, over the past couple of weeks in this space, and a couple of them got hurt, right? And most of them were like, no, this didn't impact us at all because we would never keep our money in a place like that, in the crypto space. But the people who got hurt that made a lot of money in Bitcoin, it was just something they were doing on the side. These people were so wealthy that like, they're, $600,000 one guy lost in like on FTX. Like to him, that was like kind of a rounding error in his life. And so it wasn't really super consequential, but he just had it there because it wasn't important enough for him to actually do it the right way. And so, I think when you really, really dial it in, these exchanges, I don't care where they are, whether it's FTX or Binance or Kraken or, I guess Coinbase has a bit more regulation, being that it's U.S. based company and there's a little bit more regulation behind it. But still, a lot of these things, was it Gemini slowed down withdrawals, right? Like just after everything. So when you put your money in any of these exchanges, you are giving up control and you're giving it to somebody else is becoming the custodian of your money, and you are basically giving them the control of your money. And most people don't realize that they're doing that. And so, we talk a lot about becoming your own banker. This is like effectively like when you go do this with crypto and you use these exchanges, like it's worse than using the banks. You're giving up your money to somebody that can like willingly just defraud you. Now, obviously this guy, he did it for a long time. I mean, he had some of the top politicians and athletes and, they had the name on buildings and event centers and sports arenas and all that stuff. And so he had the world kind of duped, but I mean, all Ponzi schemes do that, right? Like they all pull that off in some way. And so I think it just is the classic kind of gotcha moment where people need to realize you need to stop putting your money into assets that you don't understand. And it's not that it's good or bad. Is it good or bad for you based on your level of understanding? And if you don't get it, And I would argue anybody that doesn't get it enough to use an exchange like that to just get in, get out, get it where you need your Bitcoin or crypto to be, you don't understand it enough. If you're housing your money in any place like that, you should not be in crypto. That's kind of my take.
Love it. Steven, what's your take on this whole thing? Like, what do you think is going to happen?
I think people are not going to get their money back. I mean, at the end of the day, the chain of events, it's never happened because it's going to bankruptcy court right now. So the bankruptcy court just started its initial proceedings, and typically, let me read you a thread that I have here that's pretty good. It kind of sums up like kind of where we are right now, and I'll share my screen so you guys can see it at the same time. But this will take just a second, but it's kind of important because it talks about the order of operations of who gets paid back, and typically the customers are going to be at the bottom of that. But the thing with crypto is crypto's not even really considered money, so it's never been done before, so they don't know what the bankruptcy court's going to do. It's an interesting story, but just to give you this, it keeps getting crazier. Here are the new details that have come out in the last 24 hours. This was as of yesterday morning, just so you know. So Sam Bankman-Fried's parents own $16.4 million vacation home in the Bahamas. FTX purchased at least $121 million in luxury real estate for the use of executives' employees, including 7 condos in the Albany Resort in the Bahamas. SBF's parents are both professors at Stanford. They're successful, but hard to imagine they didn't get some help from their former billionaire son in affording a $16 million home. But did FTX deposits pay for that home? So it's already talking about, like, was he using customer money for these, or was he just stealing from the company itself? So who did the due diligence for all these investors who put millions into FTX? According to Blockworks, Bain & Company received over $100 million per year to research private companies for Tiger Global. One of these companies was FTX. Tiger invested $38 million into FTX. The FTX token, FTT, is not even close to dead. And that's what we were just talking about, Chris. Its market cap is still over $400 million, and it's trading at about the same levels as when it launched in 2019. You would think, Chris, that the FTT token would be worth zero right now. So just kind of feeding into what's going on.
Yeah, who's
so here we go.
FTT up?
Right. So a couple more things. Alameda Research lost $3.7 billion from its inception through 2021. Alameda Research was the company that FTX was selling its FTT tokens to, and then Alameda Research was then reinvesting back into FTX. And this is kind of how that circle went. So despite a raging crypto bull market in 2020 and 2021, it has still managed to lose a staggering amount of money, $3.7 billion. This completely shatters the illusion of SBF the genius that every news outlet has pushed this year. So just keep this stuff in mind. Was SBF really a genius, or was there ulterior motives that were really driving all of this that happened? The phishing scams taking advantage of FTX victims have ramped up. Take a look at this one. So now we have people coming out with these deep fakes, pretending like they're SBF, telling people, hey, you can get your money back. We just need to get your codes. And they're going in stealing more crypto from these already victims. So just a side note there, just be very, very careful with everything. And so just a little update on what's happening right there. It's just really fascinating.
It's just wild. It's just wild. And I guess the story's being written. There's going to be a book coming out written by, the one that the Big Short movie was about.
Michael Lewis.
Michael Lewis, followed him around. So I can't wait to see what that book uncovers. But, we can talk about FTX and FTT all day, but let's switch gears to another hot topic. And we're going to try to avoid politics altogether in this. But how about Elon Musk? There is so much out there, and I can't believe people doubt this man's genius and his ability to actually know what he's doing. People are constantly saying, oh, he's going to tank Twitter. Maybe he is. Maybe that was by design. I don't know. But what do you think is going on with Twitter? He's firing a bunch of people. People are leaving because they're pansy asses, and they don't want to work long hours. He's trying to rebuild a company that was broken from the get-go, trying to bring back what I believe is the freedom of speech in a proper way instead of manipulated, which is why he doesn't care that he's losing these big, advertisers. They're all pulling their money and, putting it somewhere else. And he's just like, whatever, I don't want your influence. I don't want your money if that means I have to say a certain thing or do a certain thing. I mean, Facebook, that's exactly what happened to them. They put him on the stand. And after that, it was all over. Facebook was never the same after that. And you got to believe there's some back office stuff going on there where they sat, him down and they said, all right, listen, I know you've built this awesome thing on Facebook, but it's got too much power. So here's how it's going to be. you're either going to go to jail and we're going to take everything that you have, or you're going to play by our rules. You're going to do what we say, post what we say, eliminate what we tell you not to post, and we're going to be good, and you're going to be a wealthy man. So I got to believe that's what was going on with Twitter. There was a lot of hands in the cookie jar, and Elon comes in and he's just like, I don't need any of you. I'm, and all you people can go. But I want to know, like, what is your take on Twitter? And somebody here, Canadian cryptocurrency from TikTok, just said, this is the busiest Twitter has ever been. I don't know, what he means by that, but like, Stephen, what's your take on Elon and Twitter and what he's doing right now? Do you think he's got a plan, and do you think it will work?
I do. Yes. He's already, cut. If you start doing some math on what these people got paid and how many employees they had, I think it's something like 7,500 employees. And what he's done, he's cut about 90% of the workforce. And so when you start doing the math just on salaries and money going out, like, he's reduced expenses drastically. And you look at the burn rate that he was running at, losing money, and you start factoring what he's doing there. All it takes is a couple new advertisers coming on the platform and a couple other minor changes. And what people were saying could take 4 to 6 years for him to turn into a profitable company could happen in the next, I think, in 2023. I think in the next couple of quarters, he could really turn this thing around. He's having a lot of increase in daily users rejoining the platform. I personally know a lot of people that have said, you know what, we're getting back on Twitter now. And it just goes back to people are sick and tired of, they're sick and tired of having their thoughts and their words censored, and they want to be able to share what they want to share. And when you look at what Facebook has done, I mean, Facebook, like you said, in the last couple of years has just cracked down. I mean, how many people do you know that have been put in Facebook jail or suspended from the platform, and for the most dumb things, like stuff that doesn't even make any sense? So they're going in that direction. And we look at, how people are responding to that. I mean, look at Facebook's, Meta Platforms is the new stock ticker, but look at their stock, what it's done. I mean, we went from 320 and we're trading at, where are we at? About 112 right now. So it's fallen, 60 some percent just this year, since 2023 started, which is wild. So you can see, people are speaking with their pocketbooks, so to say. And I think you're going to see more of this happening. People want that freedom of speech and want to be able to share their opinions. And not only that, but also read and learn stuff that's not fully censored and not only coming from one source. And we're seeing this over and over and over again. I mean, we just saw it with a missile landing in Poland this week, where initially all the news outlets came out and said it was Russia. Russia's attacking NATO countries. We're going to have World War III. And you look 24, 48 hours later, and it was a complete lie. They had zero basis for any of that information, and ended up being, I believe, a Ukraine missile that was misfired and landed in Poland. And so you just wait a day or two, and the entire narrative changes, and people are sick and tired of that. Because if it was up to people like Facebook, we wouldn't hear that secondary story and the truth a couple of days later, because they would just continue running with the lie. So you have to have freedom of thoughts, and I think we're going to see more and more of that trending as we go into the future.
All right, Chris, what's your take on this? And we got some people coming in here on TikTok. Look how Twitter is doing. They're not making money. That's the person that wants immediate gratification. Of course, they're not making money right now. He's changing up the whole mode of the company. Like, it makes sense. So what's your take on that?
Yeah, no, I mean, I agree with everything Steve was saying. I think it just comes down to, like, I'm never going to bet against Elon. I feel bad for the guy. They always say, and like the rule I think we all live by is never be the smartest person in the room, right? Like, you want to surround yourself, and it's like, if you live like Elon, like, you're always the smartest person in the room. So, like, I'm never going to bet against him. I'm with you. I'm rejoining the platform, and I'm actually coming up with strategies on how we're going to be more intentional, not just like getting on it and paying attention a little bit, but actually focusing on it. Because I think, as he grows, it's going to create a ton more opportunity, just for businesses, for people, the freedom. People are flocking to it. There's such a lack, Stephen was saying, there's such a lack of freedom to actually be able to express yourself unless you agree with the agenda that's being put out there by, you said we wouldn't go political, so I won't finish that statement. But here's the bottom line. the bottom line. So the bottom line for me is, like, I think it's going to be a hard road. It was such a toxic company, both culturally and financially, and there's so many bots and so many things happening in the company that he's got a big hill to climb. If anybody can do it, it's him. I mean, the dude can make a rocket land, again. And so it's like, I think he can figure this out. And I think, like any of these platforms, if you think they're all the same, it's all about traffic. It's all about advertisers. It's all about, like, how do you monetize that traffic? That's all it's about. And I think my guess is in 18 to 24 months, in that range, Twitter won't look like what it looks now. And I think it's going to be better. I think the experience will be better. I think the trust, which is the most important component of this whole thing, is going to be better. I think that'll bring more people. And then I think that'll bring more advertisers, and that'll bring more opportunity. And then it becomes this cycle. And I think, like anything else, there's been a lot of companies that have been trying to spin up, the Parlors of the world, and you got Rumble, and you have all these other companies that are trying to, like, fill a hole. And I think a lot of those companies have struggled because it's only the fringe people, so to speak, that will go to those sites. But I think the cool part is I think Elon's going to gobble all those people up and create a lot of opportunity. So.
Yeah, and just on that, Chris, I mean, I'll share, if you want to have some fun one, if you have a couple minutes to burn, just go on Twitter and go to Elon Musk profile and click where you can see tweets and replies right here, and just start reading down through some of the stuff he says. I mean, the guy's a genius. Like, he posted something the other day, just laughed. Somebody posted, it's like, Elon Musk shares a tweet. The legacy media go crazy about it. Other people start to respond and come on Twitter to read what all the controversy is about. And then Elon Musk makes another tweet. And then it's just that circle just keeps going like that. And it's just driving more and more. But the guy's a genius. I mean, you look at some of the tweets that he makes, they're just hysterical. And he just makes fun of people and just little one-liners. And I mean, last night, Founding Closet at Twitter headquarters is just a closet full of #Stay Woke sweatshirts. And he's just laughing away about it. Just how clearly biased things were. And, he's just such a genius at what he's doing right now, in my opinion. We've seen that with SpaceX. We've seen that with Twitter. We saw that with PayPal. I mean, the guy's definitely not a human being. He's definitely an alien, but it's amazing to see what an alien on Earth can do in the real world,
Oh, it's interesting. And I think people need to realize, he's one of the wealthiest men, on Earth. And, well, you exclude the Rockefellers and Rothschilds who really don't post. He's one of the wealthiest. So when people are like, oh, Twitter's losing money, he's in trouble, like they're burning too much money, like, he built all that in. Like, he can burn money there for a very long period of time, even though I think $13.8 billion of the purchase, the $44 billion purchase was borrowed funds. Like, he can stabilize that and support that. But Stephen, I think you're right. I don't think the burn rate's going to be that long. We know a thing or two about technology and burn rates with our company, Private Money Club. Every technology company, Facebook included, if you watch the social network, there's a burn rate. Sometimes it's years that a technology company will lose money before they get their point where they actually start making money and build a valuation. But the funniest part is, and why you're going to see, the .com crash all over again, is we've lost sight of fundamentals in the tech space, and we value tech companies based on things that aren't really fundamentally sound at all. So a lot of the tech companies, Twitter to be exact, and I mean, he paid that price because that was just what he had to do to make it happen. All those companies are overvalued, and you're going to very quickly start to see the cracks in the foundation on those. And you're going to start to see those valuations plummet, which you're already seeing. Meta, you're seeing all of them come down because the tech companies are valued on similar things that they were valued on in the early 2000s when the whole thing came crashing down. This recession that we're going to see, the end of this long-term debt cycle, is going to be a mix of the .com crash. In real estate, you're going to see a lot of pullback similar to 2008. Some are saying it's going to be another housing crash. And then you got to throw in the Great Depression and the eras that followed the Great Depression. All three of those time frames mix in a little, 1980s with the inflation. All three of those really dictate or kind of portray where we're going. History basically repeats itself. It's just which point in time in history repeats itself. But one thing that I just pulled up that I want to talk about, since we've got the real Chris Kirkpatrick on, and he's an expert in the IUL space, is looking at the S&P 500 or the Dow Jones.
I found this on the web for which one thing that I just pulled up, but I want to talk.
Siri went nuts.
That's all right. Siri went nuts. So, looking at that, I mean, as of right now, I don't know whether this is actually old, but the NASDAQ is down a lot, high double digits. The S&P 500 somewhere in the 20% range negative. NASDAQ's down 33%. So all the indexes are down. And they're going to go lower, folks. Like a lot of people are like, oh, well, we hit the bottom. You haven't even come close to the bottom. You know what the bottom is if you pull a chart up of the S&P 500, go back to 2009 to 2000, let's just say 13, somewhere in that range is our target. That's where we're going.
I can show that too. And just real fast before I switch over to that chart, I mean, this is, you guys have all heard of Nextdoor, right? Another social media platform. I mean, look at Nextdoor over the last year. They were up trading around $12 almost. They're currently trading at $2. So we've seen about a 90% decrease in the last year. And Nextdoor is another one of those companies where they suspend people, they deplatform people, they censor everything that's said on there. And it just goes to show you again, just people are sick and tired of that. But yeah, if we look at the S&P, I mean, where could this thing go? We got to go way back. I mean, we got to almost open up a full-time chart, because even just 2012, I mean, this is when, the Fed really started pumping money into the markets. But if you look at this thing, I mean, where could this thing go, Chris? I mean, it gets scary territory.
Real scary territory. Yeah, I love what Texas XRP said. I like how Twitter is making you verify who you are to eliminate the bots. That's pretty smart.
I mean, maybe 2000 could be considered a line here. I mean, we had 2 there, a little higher, 25, 2000 here, and it bounced off. Maybe that's the line.
Yeah, some people think the line is going to be the 2020, the pandemic. They think that's the support line. But if you really talk to any economist or any people that know how to look at a chart, they're going to tell you 2011 is probably that number. Yeah, I love it. Baby Financial. IUL agents are going to have a lot of upset customers in the future. So stay with us in a second. We're gonna hit this one in a big way. And here's another thing too. And before we get into IULs and what people don't know, because people just put money into things that they don't know, like, or understand. I want to hit this one. It looks like Claudia loves elephants. So we got an elephant lover on here. But you said Elon isn't self-made. He has no education. He was just smart enough to hire people that, to do it. Now, maybe that's the case, whether you believe he's an alien or not, or no education and not smart enough. But I know somebody else that wasn't smart enough. And all of you should know this from history class. His name was Henry Ford. He had a 5th grade education or less. He wasn't smart, not even in the slightest, barely could write, grammar was bad, everything. But he built one of the largest car companies in the world called Ford Motor Company. Claudia, maybe you've heard of that company, but maybe not. I get it. I mean, they're still a little underground. But he was put on the stand as to whether or not he was smart enough to operate Ford Motor Company. And if you look at the history books and you study this, I'm not going to have all the facts correct, but what he said up there is he said, now, I may not be smart enough from an education standpoint. I may not have the credentials and the resume and the college education and, all that to back it. But what I am smart enough to know is that I'm not smart enough. And because of that, I'm smart enough to put people smarter than me in the places of the things that I can't do. He called it his row of buttons. He had a row of buttons of people that were smarter than him, that when he needed something, he hit that button. Now, to me, that makes somebody a genius. When you finally realize in your life that you're not smart, as Claudia mentioned, Elon's not smart. Maybe he's not, but he's really smarter than you think, because he's smart enough to put people smarter than him in the right places. And he's actually smart enough to let them take control of that. And that right there sums up just about everything. Now, Steve Jobs, a lot of people think he's brilliant. He's not. He was smart. He was a visionary. But you know who was the brains? Wozniak. And most people give him no credit. But Jobs was smart enough to put smart people in places that he wasn't. He was the visionary. He was maybe good at marketing and other things and brand design. And he had an eye for detail. But he wasn't smart, as you want to say. So I think when you define smart, or you define whether somebody's capable of doing something great, you can't look at their college education. You can't look at all the things that everybody wants you to focus on. You got to look at like where genius really is made. And Elon Musk, in my books, maybe I'm not a smart guy either, but Elon is genius. So yeah. And Stephen, what do you got up here?
Well, it's just a letter he sent out this week. You know, he sent it out around midnight to all the Twitter staff, telling them they need to work long hours at high intensity, or he wants them to quit. And he called it expectations for building Twitter 2.0. He said staff need to become extremely hardcore and gave them until Thursday at 5 p.m. to agree, saying that they must work long hours at high intensity or quit and get 3 months salary. So they basically offer them a severance or work their asses off. And you were saying that's what a lot of Steve Jobs did too, sleeping in the office, you know, driving his staff just to work the hours. But that's what's required to build greatness.
Yeah, I know more successful people, folks, that don't have a big college education. And I know a lot of people, they're brilliant, they're wickedly smart, and they make $40,000 to $50,000 a year, and they have master's degrees. So when you define smart based on a college education, you are playing into the system, and you have a lot to learn. Smartest people in the world are people that learn on the ground, people that learn while doing, people that learn from failing. Those people become the ones that change the world. And if you don't think that's right, well, go back and just look at history, because it's happening over and over and over again. And this next era right now is happening. And I love what Stephen just said about, you know, that post. And we all know that, right? You're going to have to work hard and grueling hours, and you're going to have to do the unthinkable. And I don't know, 1,200 or 17, someone can correct me on my number, 12 or 1,700 people quit, which That's is awesome. It is awesome. And it's very typical of the times we live in, because people have gotten so used to easy times that they've forgotten what it's like to work hard. There's a book the late Stefan Arnio, a good friend of mine, wrote called Hard Times Create Strong Men. And then he did another one, Hard Times Create Strong Women. All of the people that quit need to get that book mailed to them. And they need to understand that nothing great is created by weak people. Nothing great. Nothing at all can happen from weak people. And all those 12 or 1,700 people that quit, they're weak. They can go bury their head in the sand. We have other words for them, but they are not ever going to change anything in anyone's life. They're going to be the ones that take, the ones that blame, just like our leaders in this country, blame, and they're never going to accomplish anything on their clock. But they're going to sit there and they're bastardized, and they're going to point fingers at all the people that are changing things and say, oh, that person, they're not doing anything good. Great. Because I'll tell you something, you know, talk to any military man or woman, anyone that served or currently serves in the military. You're going to tell me that, you know, if times get tough, they're just going to sit there and do nothing. They're going to complain. They're going to blame. Oh, why are they shooting bullets at us? Like, they shouldn't be shooting bullets at us. Like, this says that they shouldn't be doing that. They shouldn't be shooting rockets at us. They're working really hard. They're not sleeping, because they're fighting for something really, really big. Now, maybe some people call it freedom. Some people call it they're fighting for their lives, but they're putting their lives on the line so that we can have freedom. That is the ultimate sacrifice. And you know what? For all those people that quit Twitter because they didn't want to work it overnight or do the intensity that's required to rebuild a company that's broken, shame on them. Starbucks, the good news for those people, Starbucks is hiring. So go get a fucking job at Starbucks, because that's where you belong with your green hair or whatever you want to do. Anyway, I'm done with that. Let's get on to something fun. I don't really give a crap what I say.
You're awesome.
All right, we're going to talk about the markets. And we're going to talk about a vehicle that all of you have heard about, that we hear about a lot, even now, which I can't believe I'm still hearing about it, called an IUL, an Indexed Universal Life. It is a product that is the most sold and touted on product in the, you know, the brokerage world, the stock market world, the advisors, and the non-advisors, because hell, to sell an IUL, you don't even need to have a Series 7, a Series 6, a Series 63, a Series 65. You don't need any of those. You just need a life insurance license. And then you go out and, you know, you're being told to sell this thing because of the indexing. And I wanted to find an index. An index is basically just the S&P 500, the Dow Jones, the NASDAQ. It's a lookalike, right? They can create that. But IULs are about I come from that world, 20 years in that world, 16 years really in the world and 20 years around that. And I will tell you, it looks a lot like VULs. Back in 2008 and prior, we sold a lot of VULs, and I sold a lot of them, made a lot of commissions on VULs. I even owned one. And the one thing I will tell you is in 2008, the cracks in the foundation on VULs showed, and almost all of them had the risk of lapsing, meaning all the money you put into it, just because the market goes down, your policy lapses. Luckily, some of the big companies, the company I had mine with was New York Life, stepped in and said, we're not going to let your policy lapse. We're going to put a no lapse provision on there during this time when the markets are down so that your policy doesn't disappear. And it didn't, but that policy underperformed from day one all the way to, I don't know, I think I owned it for 14 years or so. The surrender period on that thing was 11 years. So I had to have it 11 years just to get out of it. But anyway, now let's go to IULs. Then they come up with this new bastardized product called an IUL. And they said, oh, it's guaranteed. Oh, we're only going to participate in the insurance company's indexes. And you don't even have to be a licensed financial advisor. You don't need any security license to sell this because, well, there's no investment because you're just participating. And people love that because they went out there and they sold what, honestly, to me, I might be speaking out of line, is the highest commissioned product in the industry. I've never seen a product that pays a higher commission to the brokers and to the agents. So then when you really look at why it's the number one talked about product, why it's the number one product being recommended by your financial advisor as being this great thing, it's because they're getting paid a big commission. But here's the fun part, and this is where I want to turn it over to you, Chris. We're entering a period of what I think will be a long recessionary period. And the average recession, Stephen, what's the average recession last? 15 months? What did we look at? We did that research.
Yeah, on average, that's what they say.
15 months. But
It
this one's probably going to be 20 plus months. This is going to be a long one. Okay. No question. Might even be longer than that. It might be the longest in history, but we'll just say a couple, 20 some months. So for almost, a year and a half to 2 years, every IUL sold is going to be facing a negative participation rate in those indexes. Literally, like the indexes are going to be at a negative. So technically you're making zero money on these IULs, but it's okay because the insurance company put a guaranteed floor. You can't lose money in an IUL because we're going to put a floor of 0 or 0.7 or whatever your floor is. So even if the market goes negative 50, you're not losing money, or are you? Because this is what they don't tell you. Chris, why don't you explain these lovely IULs, and why don't you just explain why every illustration that has ever been done, including our buddies, can't use their names here because it would be libel, but there's a couple big TikTokers. One's first name starts with a D, the other starts with a C, and you can find them. And all they do is sell IULs is the greatest thing. And there's not a single one illustration that they've done that right now actually lives up to what they showed you because it was hypothetical, it was bullshit, and it was never going to happen in the first place. Go for it.
All right, so this is teed up. So here's the deal. You said a couple things that I think are important for people to understand. Is they're sold as this like huge upside potential and downside protection, and me IULs, and I don't think this is just me, just facts. I think everybody would agree, at least you and Stephen and everybody at the Money Multiplier. They're the most misrepresented product in the world financially. And the problem is they're sold as a very simplistic, this is my big challenge with them, is that they're sold as this very simplistic solution when in fact they're a very complicated product. The one thing I've been doing in all my research, and I've been living this for, about 9 years at this point in time, just studying them and I used to be the head of business development for, the top IUL company in the country. And I left because I realized they weren't performing the way that I was teaching people that they were. And when I started having questions, companies like that don't like questions like I was asking, they don't want you to dig deeper. They don't want you to think critically. And so I just kind of like, before getting into the technicals, because I go really technical and, I can do all that stuff and we can go there if you want to. But
let's just keep it super simple. Yeah. In terms of where the problem is going to be.
Super simple. Totally. Well, and I say, let's use some common sense, right? Like common sense goes a long ways. So you kind of spoke to it. If you look at Index Universal Life, there are companies out there that offer 175-point contracts, 165-point contracts. Now, for people that are not in the industry, that doesn't really mean much to them. But for people that are in the industry, that makes a lot of sense, right? Like 100, that's a big contract. And that's a situation where you're talking, the commissions are higher in that area than that's almost double what most insurance companies are able to pay, you know, as far as commissions go. So in what world can a company pay double the commission yet also give a much higher performance, right? It just doesn't work that way. Not only that, let's use a little more common sense, is these insurance companies, you have to understand the flow of money when you're talking about when you put your money into an insurance policy, what is happening. You are not going directly into anything. If they were to take your money and put it directly into the S&P index, they would have to be licensed to be able to do so, right? This is how you participate in the index. Your money's not going from your policy into the index. Your money is going from your policy into the general fund of the life insurance company. And then they are utilizing an options budget based on what they know they're going to get for a return in the general fund, right? And so, you know, let's say the general fund's getting 4%. All of these IUL agents that are saying, oh, you know, listen, this 6% we can get you in this IUL. This is conservative. Look at it's been back tested. It's been this and that. Like, you have to understand, if it were really conservative at 6%, why would the life insurance companies not be utilizing that strategy for themselves? If it were predictable and safe and guaranteed and all the things that life insurance companies like to do, I promise you they'd be doing it for their own general fund to get their own returns. And they're not doing that because it doesn't work that way. Not only that, when you look at an illustration, for anybody that's gone down the path and looked at an illustration with an IUL agent and an IUL agent that said, hey, listen, this rate of return, this 6% assumed current illustration rate is safe, you need to understand that safe is a relative term. It just means based on the back testing, which past performance is not indicative of future results. It just says based on the back testing, you have about a 50% chance it's going to perform that well and a 50% chance it's going to perform worse. Now, here's the deal. We know that they're never going to perform exactly as sold. We know that the life insurance company has complete control of all the variables that matter the most. And so there's a thing called, and I'm going to try to keep it not too technical, but this is super important for people to understand because this is where the rubber really hits the road with these things. It's called net amount at risk. And what happens is all insurance policies, whole life, IUL, whatever, there's always like, okay, you're putting money into the cash value of the policy, and then you have money that goes into, the life insurance side, the component of the policy. And with whole life insurance, it's fixed, it's guaranteed, it's structured. With IULs, as soon as that 50% likelihood hits, which it's going to hit eventually, comes in under the fact, which, by the way, where are we right now? We're coming through this situation where, the market is, I think, going to be really ugly over the next 24 to 36 months, right? And I think that's going to create a lot of opportunity for the people that do it right, but for the people that are in IULs thinking they're doing it right, their policies are going to perform worse. They're in surrender period, so they don't have access to their money. Even if you're out of surrender period, you're probably a little bit older. And especially those people that are looking to, over the next 2 to 3 years, or at maybe like 5 to 6 years, because these next 3 years are going to hurt you. If you're in retirement and you're really leaning on those for retirement income, tax-free income, like they're sold, you are in a world of trouble. Because here's the deal, Chris, if you and I were to get an IUL policy tomorrow and fund it, max fund it, do all the things, do all the things the right way, right? And, we're in our 40s, we fund it, we're not going to, is it going to be good? No. Is it going to have long-term super negative consequences? Yes. Are we going to feel it? You and I might, because we know it and we know what to look for and whatever, but the average everyday person, you're going to be 10 to 15 years down the road before you even realize that you got punched in the face and that you are so far behind the 8 ball that you have no chance of catching up. And the reason is because of that net amount at risk. If these things don't start ahead, then they're ticking time bombs. And this is one of the reasons why even in bull markets, even when times are good, we just came through the greatest bull run of all time, right? That's why I did the IUL challenge. That's why nobody has won the IUL challenge yet. Still.
Explain the IUL's challenge. I love this. People don't know what that means.
So The IUL challenge is basically saying, hey, listen, guys, like, first of all, what inspired the IUL challenge is all the IUL trolls out there that are telling me that, I'm wrong and IULs are the best thing since sliced bread and whatever. And so I got so frustrated, like going back and forth and arguing with them, that I just hit the point where I was like, all right, put up or shut up. Like, I know I'm right. I know you're wrong. So why don't I just offer to pay you if you're right? I'll give you money. So what I'll do is, we just came through the greatest bull run of all time. Fair enough? And I don't think anybody can argue that. That's indisputable. Fair enough? Okay. So if IUL gives and provides upside potential and downside protection, so upside potential would tell me, at least the way it's sold, would lead me to believe that I could participate in the bull run and getting better returns inside my policy. Fair enough? So then if that's the case, common sense would then tell me that if I bought this policy 10 years ago and participated in that bull run the whole time, that what my policy was illustrated at, I should have more money at the 10-year mark than it was illustrated, because it was nothing but a bull run. It was the greatest bull run. So if it didn't outperform that, then we have a problem. And so here's the bottom line. Even in the greatest bull run of all time, IULs did not perform. Now, there were some, and this is why I did the IUL challenge. I will say this, and I didn't do the IUL challenge saying and thinking that I would never have to pay somebody $1,000, because at some point in time, I'm fully aware and expecting I'm going to have to pay somebody $1,000. That's not the point. The reason I'm doing it is to start the conversation. It's to start the conversation about the fact that, like, if 99.9% of policies are not performing the way that they're sold in the greatest bull run, when you're supposed to get upside potential and downside protection, what are they going to do when the market goes bad, right? And I think it's an opportunity for people to learn that the markets have nothing to do with anything. The markets, the S&P performance, whether it's the S&P 500 index, the Russell 2000 index, or the Dow Jones index, or whatever index that you're talking about, those have nothing to do with it. The things that the only thing that matters with your IUL, and I'm going to break it. This is the simplest I could ever make it for anybody. And if you can't understand this, and if you don't do the research to understand this, you need to not do it, and you need to stop selling them. There's two things that impact. I don't care what index we're talking about. We have the options budget and we have the options costs. Those are the only two things that matter. All the other smoke and mirrors. Think about it this way. We could, and you've seen this, right? We could have an S&P 500 index, right? And so, Chris, I could sell you as an IUL agent. I could say, hey, Chris, let's buy an S&P, or let's get you an IUL, and in this IUL, there's 7 different S&P 500 index options, right? And one's going to be like a 10% cap with a 100% participation rate. One's going to be like a 14% cap with a 60% participation rate. One's going to be like an 8% cap with 140. Like, one's going to be no cap, so you could fully participate in the bull market, but there's going to be a spread charge, meaning whatever that spread charge is, say 7%. The first 7% you don't get any of. That goes, that comes right off the top. So we could have all these different options, right? They're all BS, man. They're like, and here's why. Because at the end of the day, what are the two variables that matter? The options budget and the options cost. So if I'm buying the S&P 500 options, right, the life insurance company, everything else is at their disposal. And if you look at it, the cap rates have the ability to be changed. The participation rates have the ability to be changed. The spread charges have the ability to be changed. And the reason is the life insurance companies will change them based on those two options. The reason IULs didn't perform over the past decade has nothing to do with the fact that the S&P 500 didn't perform well. It has everything to do with the fact that the performance of the S&P really has nothing to do with the performance of your IUL participating in the S&P, quote unquote. And the reason is because the only thing that matters is what's their options budget, i.e. what's the return of the general fund, and what is the cost of options. And if you know anything, and you know this probably pretty well, in times of volatility, we have a perfect storm right now going for IULs. It is a perfect storm because over the past decade, IUL companies have created their own problem, because back when I was in the business of selling IUL and representing and training agents to sell IUL, which I totally regret, there were 11 to 14 companies that were selling it. Now there's over 70. So what does that mean? That means the supply and demand of IUL options has gotten out of whack. You got 70 companies flooding the options market with demand. And if you understand options, it's all supply and demand product,
Wow.
right? Like the more demand, the cost of options goes up. So what does that do? That hurts the performance of IULs, because what are the two variables? Options costs and options budget. So if the budget over the last decade has gone down because the fixed market has gone down, so the budget has shrank because the general fund performance has gone down, and the options costs have gone up, that's why these have performed so poorly. And people need to understand that moving forward, what's happening is a lot of IUL agents are saying, oh, well, guess what? The market's going up, so the options budget is going to go up. And that is true. That is true. The problem is we still have all these companies buying all these options, and so the options costs are going up. But now what's happening is we have, as interest rates go up, what does that do? That does two more things to IUL that are really bad. Is A, it makes market performance not so pretty, right? So that's a bad thing. And then what happened in like 2008 and 2009 to options costs because of all the volatility? They went through the roof, like 150% increases. And so what happens right now is, as interest rates are going up, it's putting so much pressure. The indexes are not going to perform. The options costs are going to go up. So even in an increasing environment where the budget will get bigger, the cost is going to negate that. And so at the end of the day, no matter what happens moving forward, I think we're going to see IULs are a ticking time bomb, and you're going to see class action lawsuits all over the place, and you're going to see all sorts of these influencers that we're not allowed to name, although I'd love to name them right now, but I won't because I'm on your channel. If it were my channel, I would just rip it, but like, I'm going to respect you. So it is what it is. Which is really funny. Like, these people, by the way, can I just go here for a second? Like,
yeah, just one more, because we're right at time.
Okay. So these people, I think it's funny that these idiots that are out there selling and duping people into this, duping you into believing that this is the best thing for you, they have to get litigious, right? To try to shut up the other side of the story, right? I've gotten legal letters. It's been, and it's ridiculous. And so what I think is just, it's pathetic that they have to do that, when if they were, right, and they had a good foot to stand on, they wouldn't have to do that. And what I would say is this: is read the contract. And I'm not going to name the company, but they sell the idea that by going out and borrowing against your policy to get more insurance, to take advantage of the positive arbitrage and really just compound that, go read the contract. It's going to tell you that by doing what they're telling you is the best thing for you to do is going to dramatically increase your chance of lapsing the policy. Like, that's in the illustration. Go just read. Like, you can't look at these illustrations and just look at the ledger and look at the numbers. You have to read the print. You have to. Because it's all about control. It's not about the numbers. The numbers, even in a whole life policy, are never going to match up. Read the whole illustration, the fine print about who actually controls and has the control in the contract. With whole life, you, the policyholder, have the control. With IUL, the insurance company has the control.
Oh, I love it. I love it. So, folks, I know we burned a lot of time on that and not so much the news, but it's really important because all of you have more than likely been exposed to IULs. I was asking some people, and we had some people come in and be honest and say, yeah, I do, or I have a friend that does. And this is going to be a major thing. You're going to see heads roll. You're going to see major regulation come into this industry against IULs, and you're going to see all these big million follower people on TikTok that are talking IUL all the time. One is a girl, one is an older guy with slick back hair with a D in front of his name, and the other guy is, I don't know, he looks like he just came off the golf course every single day, and his name starts with a C. They will either be so wrapped up in arbitration cases, maybe they'll even be banned from the industry. Very rarely they'll go to jail because they're really, there's nothing they're going to go to jail for, but they'll be out of the business. You won't hear of them, see of them anymore. Just like all those crypto coaching programs and everything else that you saw, those people are gone. You're going to see the same thing happen, but whole life will never go anywhere. It hasn't forever because it's boring and there's no moving parts. But I love what Chris said. And Stephen, I'd like your opinion on this as we wrap. One of the things we always say, it's one of the laws of wealth. Don't invest in things that you don't know, like, and understand. Protect your wealth by investing in things that you know, like, and understand. Now, Chris said a lot of things there, and I bet you some of your heads are spinning because you don't understand any of it. Then why would you have put money into it? Why would you put money into it if you didn't understand it? Why didn't you read the contract? And if you didn't understand the contract, why didn't you ask the right questions? And if you didn't ask the right questions, how do you know what you don't know? That's the thing. A whole life contract, literally the contract, it's so easy. How to change your beneficiary, how to change your ownership, how to take a loan, all these things. It's like common sense, logical stuff. And that's what I like. I'm simple. Stephen, what do you think?
Yeah, I mean, I can explain a whole life contract in 5 minutes to somebody that knows nothing about it. It's that simple. I mean, and that's the beauty of it. And you want to invest, but not only invest, but you want to put your money into vehicles that you, like you said, you understand, you like, and that's the beauty of whole life is it's very easy to understand once you kind of, the hard part is wrapping your head around the IBC part of it, the infinite banking concept, and using it for banking purposes and moving the money and recapturing and all that goes in IBC. Given that's a little more complicated, although once you get it, it kind of clicks and it's like, oh, that was easy, but it does take a minute. Whole life is just simple. So that's the beauty of it. And when you're comfortable putting your money into something, it makes it that much easier to do so. And I love it, Chris. Thanks for getting deep on that stuff, and agree with you 100% on everything you're saying.
And Roy Lee from YouTube said, no one can invest your money better than you in something you know a lot about. That is truth. Because if you're an expert in something, you know a lot about something, you're going to be the best steward of your money and investing in it. And the reason we went down this rabbit hole is I saw Chris jump on, and then I kind of asked him if he'd join us, is because when you think about FTX, what we opened up on and what's in the news every day, because this show's all about what the F happened in the markets a week, prior. FTX is engulfed all the news channels. Well, if FTX is kind of unfolding, you're seeing behind the curtain a little bit there. How long is it before you see behind the curtain of IULs? And I think you're going to start seeing that pretty soon, but it's going to be a lagging indicator because it does take a while. People don't get their statements every month. They don't log in every month. Some of them get their statements once a year. And when they start getting their statements, if they're smart enough to compare it to what they were shown, that hypothetical one that he hasn't had to pay $1,000 on one of them because none of them have outperformed what they said they were going to versus where you're at, you're going to see the cracks right there. You're going to see that you are not performing as they showed it. And that is absolutely going to be the thing in the future. You're not going to see them. And then your agent or advisor, most of them are just agents. And someone mentioned almost everybody selling IUL, and a lot of them are WTF agents, are less than 2 years in the business. Less than 2 years. What the hell do they even know? They don't. That's the problem. And just look at the IUL people on there, with the exception of the D guy in his first name. They're all pretty young, which means they probably don't have a lot of time in the industry, which means they probably don't know what they don't know. And they probably have never, ever, ever seen a recessionary period in their life, and they don't even have a clue what the ramifications are. But folks, all of you do now. So I hope you enjoyed that little education on IULs. I hope it woke you up, because Stephen and I and our entire team sees them all the time. And the problem is most of the people that have them, that we talk to, they want out of them. And the biggest problem is they can't really get out of them because the insurance company and the agent either didn't explain it or did a terrible job explaining what the surrender charge is. So anybody that has an IUL, unfortunately, getting out of it is going to cost you money. And that's going to be a hard pill to swallow. Stephen, what do you have to say? And what do we got going on at 1:00 p.m. Eastern time today?
Yeah, so just a few things to wrap this up today. Later today, the Fed is releasing its minutes, which is kind of like a bi-month, until their next meeting, they release minutes to kind of let you know what they're thinking. So keep an eye on that. The markets are waiting for it. Are they going to keep with the 3 quarters? Are they thinking about slowing down? Powell seems to be on a cliff. He needs to crush inflation, keep raising rates, but some of the other members are starting to pull back a little bit and listen to the policyholders. So keep an eye on that. The next CPI report, of course, is coming out December 13th, so we got a few weeks. But right now, we'll determine what's going to happen until then with these Fed minutes. So keep an eye on that at 1:00 Eastern. We have the Wealth Webinar Series. So join us at 1 p.m. Eastern today. You can go to chrisnaugle.com. Just scroll a little bit down this screen. Click on Wealth Webinar Wednesday. We'll actually give you 3 of Chris's best-selling books free of charge just for registering for the free Wealth Webinar today. So you don't want to miss that. And I'll leave it with this. I got my Bob Dylan shirt on today. Go listen to the song Rolling Like a Rolling Stone. And I have a feeling that's a lot of what we're going to see with a lot of these tech people that have been living the easy life with all of these tens of thousands of job cuts and people's lives being upended and the market's coming down. Go listen to Like a Rolling Stone by my man Bob Dylan, and you'll see exactly what's happening. That's all I got.
And also follow that up with The Times Are A-Changing by Bob Dylan. Folks,
That's right.
Thanks for joining us for the show. Happy Thanksgiving. If you don't catch us at 1 o'clock Eastern time today, if you want to register, go to chrisnaugle.com. Just click the button for the free registration. And Chris, make sure every one of you, if you want to learn more about Chris Kirkpatrick, check him out on TikTok. Chris, what's your channel?
Yeah, it's just real Chris Kirkpatrick on TikTok and on Life 180 on YouTube.
Awesome, folks. So check it out. Get in the
Thanks,
know.
man.
Get in the know and learn what you're putting your money into and be an expert in it. If you're not, exit stage left. Thanks for joining us for another episode of What the F Happened. Chris, happy Thanksgiving. We'll see you soon.
You too, man. All right, brother.
Bye.